And welcome back to Bitcoin Advisors channel. My name is Chris. I'm bringing you this lovely cryptocurrency video right here from Westlake Village, California. It is overcast and gloomy this morning. You can see the clouds in the background. Not too bad, but I want to jump right into Bitcoin's price action and follow up on the past week. And I apologize, guys. I was out of town, came back, and had 2 days of technical difficulties amid trading these markets. Had my hands quite full, and so I'm just getting back into the swing of things here. Wanted to give you guys some updates and follow up on price action we spoke about last week. So we had this descending triangle on the 4-hour time frame. We broke it to the downside. We hit the measure move. As we said, these descending triangles have about a 70% chance to break to the downside, and in fact we did break that. So you take 50% of the triangle, and that gives you the measure move, which was hit pretty much to the T, a little bit lower in fact. And so that was a pretty nice trade. And then what happened? So I'm just gonna kind of give you my thoughts as I was trading this market. We had this little bull flag right here, and what I was looking at is either a 4-hour closure above or below these wicks, and we closed it above, and Bitcoin ripped to the upside, stopped me out. And in fact, the next major pivot was this wick right here. As soon as we took that out, it was time to get bullish again. And in fact, what happened is as the 4-hour Stokes crossed back to the upside, we saw just a major, massive bear trap, what I would call this. Bit of a bear trap. And so everybody was getting real bearish right here, including myself. And as we broke it back to the upside, what I was looking for this move to start to cool off, in fact, was the BBWP to lose the exponential and become or start to come back down. And that's what I would suspect price action over the weekend to be a bit sideways. And now I will denote the next major move with a 4-hour closure above or below these wicks here. And if BBWP, the volatility metric, begins to decline, I would expect a kind of mean reversion of price action. And what does that mean? So essentially we'll get an opposite. When volatility is expanding, you're going to get price to move one direction. When it is contracting, price should move in the opposite direction. And what I am looking for is for Bitcoin to at least come down and test this region right here at 20,500, somewhere in this region, even as low as 20,150 should be a good, actually that would be a perfect silver cross when the 21 crosses the green 55. And typically, and again, this is an investment advice, I'm not a financial advisor, but the way these silver crosses work, you want to see price action get sucked into the cross. Very similarly, we saw something back here. We saw the cross happen, and price action comes back down into the cross. Didn't quite get to the 21 or the 55, but that was the, big move down there. And silver cross back here. Here's more of a perfect silver cross on the 4-hour. You get the cross, you get sucked right into price action, and that would be your buy. And then you put a risk or a stop loss right below the prior wick, which would be right around here. So vice versa, the way I would be playing this, if this one came in and tested the cross somewhere between the yellow 21 and the green 55, stop loss would be right below this wick right here. And I'd be looking for, a nice little bounce move upwards and onwards. Wanted to follow up on some of the higher term time frames we were talking about as well, mainly the 2-day and the 5-day, but I'll get to that in just a second. We will have some bearish divergence forming here on the 4-hour time frame. Coming back from this point right here, this point right here, we'll have two drives. Actually, we'll have a couple of drives coming back from this high right here, which should be good enough to get that move down. And I would denote that with any kind of a 4-hour closure below 21,000. And that should give us a nice little leg down, perhaps to the bottom side of the range at 20,500. What else is on the board? Okay, 6-hour. So we didn't quite take out the August 24th highs on any major time frame. 8-hour, 10-hour, daily, 12-hour. So bearish divergence will be formulating on quite a few time frames, at least 1 or 2 drives, which typically gets you a move minimum to the 9 at 20,500 or to the yellow 21 at 20,300. And I would denote the 12-hour high with any kind of a closure. Yeah, below the pivot of 21,000 is probably good enough for me. Also, noting that stochastics will not cross momentum down until we get down below 19,800. So this move may still have some legs on it. Volatility is still expanding on the 12-hour. We are reaching the higher end of the spectrum on all time frames above a 4-hour. And what is the 1 hour? The 1 hour is resetting right now and is set to expand again. Stokes will cross back up above 21,311. So we could get another try higher here over the weekend. And, you know, even a 1 hour closure above 21.7 will look good for probably a move up to 21,950. And that, also notice we have the golden cross on the hourly time frame. It is about to cross on the 2 hour as well. And there is a few drives of bearish divergence formulating here. So if the RSI does get kicked out of the bullish control zone on the 2 hour, that'll be a good indicator that we are going to come down a bit more, and you're already seeing that happen here on the 1 hour time frame. Not a very powerful time frame if that. So let's get on to some of the more powerful time frames here. And what kind of set this market off? And I would say this, it's King Dollar, right? So the dollar bill, the Dixie, right, pulled back from the highs, and this is a big pullback for the dollar. The dollar moves pretty slowly in terms of speed, but a 2.5% drop in 3 days, or a 2%, call it 2% in 3 days. That not only gave Bitcoin some room to move to the upside, but you can see NASDAQ also popped up here. And this is a silver cross to the downside. So this is going to be the harbinger of death and despair, or peace and prosperity for the NASDAQ. And I believe that is right at the 618 fib on the daily time frame, which is where those bull traps like to come in. No, we're pretty much there at the 618. So if we do start closing dailies above 12,700, that'll be an indicator, hey, Bitcoin's probably going to take that leg up. Following that, additionally, for Dixie on the daily time frame, we had several drives of hidden bearish divergence. And again, what is that? Well, coming back from this point right here, you've got 1, 2, 3, 4. That is 4 drives of hidden bearish divergence where the price is making higher highs and the RSI is making lower highs. So where would a target be for something like that? I would say if we get our fib out here, first target is going to be right here And the second target is going to be right there. And let's see where that lines up on the weekly time frame. Why am I taking a look at the weekly? Weekly is still crossed up and will cross down below 108 over the next week. And in fact, the weekly time frame has not confirmed the second drive of hidden bearish divergence, but it is on its way there. Again, you've got 1, 2 lower highs, and that will be confirmed with any kind of a closure below. I would say call it 108 or 107.86 in the next week, ahead of what's most likely to be a bogus CPI read, if you ask me. We know that CPI is not getting any better here. However, that is the inflation rate. I don't know if you saw the average gas price in California was like $5.50 over the last month. That's absolutely crazy. But Kiplinger.com says the September 13th CPI read will likely drop the yearly inflation rate from 8.5% to 8%. Probably the result of another big drop in gasoline prices. So, and used car prices. Oh, my daughter needs a new car. She just turned 16, so that is something to note. What else? Oh, I did want to, a couple news pieces. It was Gary Gensler again, you know, the guy with $140 million or whatever it is portfolio in the stock market, trying to say that over 1,000 different coins are going to be securities. No wonder he doesn't like crypto, right? He's getting paid to go against it to help the stock market out. But this was an interesting article. So the CEO of Pantera Capital, Dan Moorhead, is expressing some bullish sentiment. In an interview on Bloomberg, Moorhead says that Bitcoin bottomed out in June and is on the cusp of a bull market as it has surpassed the average period of a bear cycle. He said, you know, we've been doing this for 10 years. We've been through 3 big bear market cycles, and on average, they lasted 220 days. That's basically what we've just had. He said, I think we hit the lows in June. We'll see. And then we're on to the next bull market, and it might be rocky. It might take a while to get going, but I think that we're on the next leg of the rally. So the growth rate, and when they asked his end-of-year and 5-year price target for Bitcoin, the Pantera Capital CEO says the flagship crypto asset is likely to maintain the average annual growth rate of 150% for a while. So I actually did a little study, and Bitcoin's done 175% for the past 10 years in a row. It was 200% a year, and with the bear market prices in play right now, it's, you know, closer to 150%. So I think that was a perfect answer. In fact, I think I agree with Dan on this. Don't necessarily agree that the market is done with the pain. And however, this is a bullish engulfing candle on the weekly time frame. And do we have bullish divergence coming back from this point? Yes, we do. And that should give us a drive at least up to this guy and possibly up to 13.4 on the NASDAQ, which would be a nice little pump ahead of the CPI expectations. So the stock market could rally into this, and then we had the FOMC meeting on I believe it's the 20th and the 21st of this month. Don't quote me there, but somewhere around September 21st. Then we get the next Fed rate hike of 75 basis points, and that could be, I think that is more likely than not. something else to be aware of, I did notice here on the stock market, is this gap. So prices could come back down again, test the silver cross. I'd be more than happy to see something like that happen. And as well, there is a gap on the US dollar right up here. So those gaps are going to get filled at some point. I don't know if it'll be next week or next month or in 2 months, but that does give us some room for the dollar to pop back up and play out the hidden bullish divergence, which again is formulating between these points right here as we got higher lows and lower lows in RSI. So that would be the points for the bears. On the other side, there's a lot of points for the bulls right now, with the 2-day time frame putting in its first drive of hidden bullish divergence. Could we say the move has already played out? Yes, I do think we could. And my setup here is not as convenient with the technology malfunction. But we are getting from this point right here. Yeah, we've got 2 drives. This one doesn't necessarily get confirmed in my book as a higher low. Maybe you could say that. It definitely looks like it on the RSI. And with 2 drives, you get a move up to the yellow 21, which is what we got. 3 drives gets you a move to the green line right there. So perhaps we do come back down, put in a higher low on the daily time frame, and you know, we see the rest of this move play out to the upside. 2-day time frame, Stokes are up, volatility is declining, so we typically want to see this come down and then get the lift off, and as expansion happens, we should get a big move off the 2-day time frame. Something else to note, on the 5-day, we do have a bullish divergence, which first drive gets you a move up to the 21, up to the 9. The second target is the 21, and that is in the cards. However, I'm not ready to call this a bull market until we get a trend reversal on the 5-day and the weekly. And this 5-day is going to be closing here. Momentum is still to the downside below 21,552. So spot price action has been leading the market. However, on CMEs, we have extremely low volatility, and Stokes will be crossing up as we open up on Monday unless we gap down. So we got another 3 days and 6 hours on this on the 5-day time frame, and unless we gap down 21,300, so that is in the cards. You know, the next 2 days is going to be very important here for price action. What are the market makers going to do? You know, that is the question. The market makers are going to run this market. Are people still holding short bags? And are they going to run it to the upside, or is everybody already gone long here and now playing it back to the moon? That is the question. So on spot price action, I would say this is a very, very important factor to realize in 2 days and 9 hours. So that's actually coming into Monday, Tuesday. Right, today's Saturday, so 2 days from now would be Monday, and then Tuesday. That is the CPI read. That is the Ethereum merge. Was it a buy the rumor, sell the news type of event? We will see. We'll be covering that next week. And something I did note on Ethereum here is we have this broadening wedge, whatever you want to call this. This is the 4-hour trend right now. And coming back from this point right here, we do not have any bearish divergence. However, hidden bearish divergence is formulating to the 1, 2, 3, 4, and this would be the 5th drive. And I would say that gives you a shot back to the bottom side of the range, with confirmation of any kind of a 4-hour closure below 1685. That'll look good for a nice move down. We also have the golden cross coming on Ethereum right now. So I would keep a close eye, a keen eye on that position right there if you are in Ethereum. We did make a slightly higher high than the August 24th highs here on Ethereum. Let's say we got it on the daily as well. So Ethereum looking bullish at the moment, and we got the silver cross, pretty much a perfect silver cross right here with the test right here. And if this wedge does break, I mean, the measure move on this wedge is going to be something like this. And that would give us a target almost up to the purple 200. And what do we got on the weekly time frame? So we still got lower highs and lower lows on the weekly. And again, this could be the first higher low. In fact, it will be a higher low with any kind of a closure above 1724 here on this week's closure. So what we'd want to see is a higher high, and I'd call trend reversal on Ethereum. And the same thing for Bitcoin. We need a higher low, which that could be the first higher low on spot price. That could be the first higher low on CME. In fact, it is. First higher low, then a higher high, and then trend reversal. So that is something to be aware of. And maybe what happens, the least thing that we suspected in this type of environment, all of a sudden we start ripping to the upside in September, even though September is typically a down month. We do have gap fills coming in at 34 and 29,000 for CME as well. All right, I think this video is long enough for today, guys. Hope you have a blessed, highly favored weekend. I'll check back in with you on Monday. Take care, and I'll sign out now.